Well, run us through what you're
Alishia.
making of the market movements we're seeing today.
Well, a lot of it obviously on the back of a very strong dollar, very strong gold price and a very strong platinum price. We see Harmony up about 4.5%, Anglo Gold up also considerably about 3.5%. So really driven by commodities today.
Well, it seems to an extent that it's that G20 meeting over the weekend that's really keeping market sentiment buoyed here, where we've had finance ministers insist that trillions of dollars of emergency economic supports would be needed for some time, and they're showing no signs of really pulling back at this stage of the game, encouraging growth prospects, one would assume.
You would assume that, however, you can see by the market with the amount of money that's coming into the gold markets that people don't believe that these governments will be able to get out of these very big cash inflows that they put into the markets. And that's why you're seeing gold go up so much, because people are looking for inflation to start moving up and starting to hedge that with the gold. And so the underlying market might feel that they're not totally sustainable with what they're saying, and they're going back into the gold, back into the commodities for protection.
Well, looking at that gold price, we've moved above that 1,000 mark. What have you made of that, and do you see it being sustainable in your books?
Well, it is a very big break. It's to try to get to 1,000 a good few times. It's touched there last year and I think once earlier this year. If it sustains over $1,000, I think it's a very big break, and we can look up to about $1,100 if it stays above there for a considerable period of time.
For now, we seem to be seeing the gold miners taking much comfort from that, trading higher today, with Harmony up 5%, gold miners over 2.5% to the good so far.
Yes, very good. I think that some of the marginal miners, more like Harmony, are very geared to a gold price, and a move like this really does help them get profits in very quickly. The problem there is if there could be an oversupply of gold as this gold price stays above $1,000, you'll get a flood of gold onto the market, and then we can come down quite quickly after that.
Looking at problems and possible headwinds that these miners face moving forward is when it comes to the exchange rate. I mean, at current commodity prices, we've had some saying that the dollar-rand rate at 7.50 will almost certainly lead to further and quite severe job losses and shaft closures for our miners, specifically in the platinum industry. And a dollar-rand at 7 is where we're going to see closures in both gold and platinum spaces together. So what's your view on that kind of commentary that's being put out there right now?
Obviously, the gold miners have to look very close at their costs. If they can't get their costs to go down at a $7.50 level, if the gold price doesn't break 1,000 for a very long time and it stays maybe around 9.50, but the rand stays at 7.50 to 7 rand to the dollar, they are going to have very big and real cost pressures on producing, and it is a problem for the South African gold miners. But obviously, as that gold price comes down, we should see some weakening in the rand.
It's a problem that's shared with the manufacturing sector as well. What's your outlook for that space, given the fact that we've had many say that the rand looks sustainable at these levels?
It's very worrying for the manufacturing sector. Our exporters are under massive pressure to get their commodities and the products that they're producing overseas with such a strong rand. The only benefit of the strong rand is that inflation is coming down. The PPI the inflationary pressures are down, and CPI should come down quite considerably and maybe lead to a cut in the interest rates. And that cut hopefully will get the consumer buying again in South Africa and the local consumer to prop that market up.
Well, in the manufacturing space, we saw Amalgamated Appliances Holdings out with numbers this morning. The net loss there widening sharply, just illustrative of some of the pressure that these manufacturers have been under of late. What did you make of those numbers?
Under a lot of pressure. Mainly they had a product that was in generators, which was a very big part of their market, and those generators, as the whole downturn in the economy happened, so no one needed those generators. There's no pressure on the Eskom's grid anymore, and they took a very big loss from that, and just shows you how a slowdown in the economy hampers so many of these type of companies in South Africa. I think that they really do need another interest rate cut and a little bit of weakening in the rand as well.
Well, that's one of the corporates that's released numbers already this morning. We're still waiting for numbers out of Steinhoff. So let's look ahead a bit here. We've had deal rumorings abounding in this space as well. The share price also doing pretty well since its low in March, where it was sitting at 9 rand. Where now we've got Steinhoff's share price at 17 rand. What are your expectations out of that announcement this afternoon?
Yeah, well, they've had a very big recovery from the March low of R9, nearly doubled since then. There is a bit of rumours that there is something happening with Steinhoff, if it's going to be a consolidation or a purchase of another company or someone purchasing them. But it really is rumour at the moment. But the share price has done a lot at the moment, and they really do need the European economy to move up. They've got a lot of furniture businesses in Europe, and as we see those green shoots in Europe coming through, it helps the slow South African economy at the moment.
Well, what are your expectations for what's left of this week, Rob? Because while yesterday was a holiday over in the US, as of today, traders are back to the market, especially in the US after the summer holidays, and trading volumes are being expected to pick up on the back of that.
Well, I think on Friday we had those non-farm payrolls that came out, so we couldn't really see how the American market traded more than just one day ahead. So they were slightly worse than expected, but nothing bad. And I think the market is going to carry on buying and moving up until that trend changes and has a considerable change in trend. I think that you have to stay on the long side.